This week, FHA announces a new HECM limit for 2024. We'll tell you what that is, how the HECM limit really works, and what it is not.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. The Federal Housing Administration has announced that the HECM limit will be increased effective January 1st, 2024. Happy New Year. The new HECM limit, or the maximum home value that may be considered in a federally insured reverse mortgage, or HECM, is $1,149,825. That applies to traditional HECM transactions, HECM-to-HECM refis, and purchases. Now, those have to have a case number that is assigned in the calendar year 2024. That effectively increases the HECM limit over $60,000 more than 2023. So how is the HECM limit actually calculated? The HECM limit is 1.5 times, or 150%, of the Federal Housing Finance Agency's annual conforming limit. Now, the conforming loan limit is the maximum dollar amount of a traditional or forward mortgage that Freddie Mac or Fannie Mae are willing to purchase or to guarantee. Now, since the 2024 conforming limit is $766,550, we can see that 1.5 or 150% of that gives us the HECM limit. But how are any increases in the limit calculated? But before we dive into why the HECM limit is increased and how that is done each year, please take just a moment and hit the like button. If you appreciate this episode and the other ones we produce, it really helps our ranking in YouTube, and we truly appreciate you doing it. Now back to it. Any increases to the HECM limit in a given year are going to be based on an increase in the Federal Housing Finance Agency's Home Price Index, or the HPI, and that tracks the average price changes in recurring sales of similar single-family properties, which are securitized or purchased by the GSEs, yes, Fannie Mae or Freddie Mac. Now, due to the index's growth, both the HECM limit and conforming loan limit increased 5.5% over 2023. And that's very welcome news for originators in high-cost housing markets, but the 2024 increase was also less than half of the 12% boost we saw in 2023, but that can be attributed to a slowing rate of home appreciation. But what happens if there is a housing reset or a crash that leads the home price index to fall? To answer that, we're going to simply go back to the years that followed the great financial crisis of 2008. Now, with many markets across the country having seen home values fall during that crash, 30 to 50%, the HECM limit actually remained at $625,500 between the years 2009 through 2016. It wasn't until the increases in the home price index, which actually began about 2012, eventually erased the previous negative benchmarks, that the HECM limit began to rise in 2017. In other words, a decrease in the home price index in any given year does not reduce the HECM or conforming limit, but instead those losses have to be offset by gains before any increases are made. So for example, the growth of the index and the subsequent HECM limit we can see in this chart track closely with a steadily recovering housing market in the years 2017 through 2021. But then came larger increases in the HECM limit and the post-pandemic housing boom. Now, one last word. Words matter, and especially when it comes to one of the most pivotal terms that ultimately determines a HECM's principal limit for a borrower with a high-valued property. And truth be told, when it comes to the HECM limit, that term gets a little bit confused and even misused amongst reverse mortgage professionals, even seasoned ones, and regulators. In his blog, UnderstandingReverse.com, Dan Holtquist writes, "No, this is not a lending limit. Stop calling it that. A lending limit is a traditional or forward mortgage term. On the reverse side, borrowers can borrow more than this amount if they hold their HECM long enough and or their line of credit grows to exceed this amount. It's also not the maximum claim amount, or the MCA. Even regulators make this mistake drafting the update each year." It should be noted that the maximum claim amount is actually the home's value up to the HECM limit, but the HECM limit is the maximum home value that's used to calculate the principal limit in a given calendar year. So what lies ahead? If home values fall modestly or even substantially next year, the 2025 HECM limit would actually remain the same until cumulative gains in the home price index actually exceeded any previous losses. Now, if that's the case, we could see ourselves with a $1.1 million HECM limit for some time. What are your thoughts? Leave your comments in the comment section below. Also, be sure to share this video on LinkedIn. Thank you for those of you doing that each and every week. I see you out there. Don't forget we have a YouTube channel where you can subscribe and also hit the notification bell. That way you never miss an upcoming episode. And each and every week, speaking of episodes, we have HECM World Weekly, which is now a video and audio podcast. You can find us on Apple Music, Spotify, Podbean, and our video podcast, of course, is here on HECM World as well, or YouTube. Thanks again for watching, and be sure to return next week for more reverse mortgage news, commentary, and analysis that you'll only find here at HECM World. Have a great week.